Hi, for those of you who don't know me, my name is Josh, and I'm part of the Good Brothers Trading Academy. In today's lesson, we'll be learning on how to feel comfortable in our trades. Now, first, I'm brand new to YouTube, so please hit the like button, subscribe, turn on the notification bell, so each time I upload new videos, you'll be first to be notified. The concept of being and feeling comfortable in your trades is simple, especially when we get started out. We need to take a position that we feel comfortable with to be in our trades. We want to so bad, and I was there at one point, where we want to take bigger positions because we want to make more money like these other individuals in the market or other people on YouTube. Now let's just look at a concept real quick. We have in this particular pattern, we have direct highs, okay? So let's put in our top where we see that the stock has topped out at. We see that we get some rejections at this point. We also see that there is some higher highs being put in, some highs being put in, and the stock price is unable to get over that. We also see that there are clear lows at this point. So we can put in our clear lows, and then we also see these other rejection points. So we get some rejection here, we get some buying pressure off the same area. So let's go ahead and put another support or resistance line there. Now, keeping it very simple, what we want to look at is we're going to break it down on the concept of just saying, let's use a 1%, even up to a 2% stop loss. Now, I'm not saying a 1% or 2% stop loss on your entire account value. Many times we'll hear that people will say, you're only supposed to risk 1 to 2% of their account. What we do as beginners is we risk 1 to 2% on the dollar value we are invested. For example, if Facebook is trading at $180 a share, you're risking 1% of $180, as in you're going to buy one share. Now, you can buy up to 5 shares or whatever you're comfortable with. I don't know your risk tolerance, but I know for the simple fact that trading with less starting out is going to be more beneficial to you. And I'll tell you why. As the stock price tops out, and as we start to see it, we get this rejection at the top. We also start seeing that maybe a double bottom is being put in. We see that maybe arguably a triple top is being put in up here. As the stock price continues to sell off, let's say we want to, because it's done it before, we found buyers in this area, right? Supply and demand, we have demand down in the bottom, and so price becomes more attractive to the investors, and we find this particular price to be attractive. Let's call it $170 on Facebook. We find more buyers. So let's say the stock price reaches $170, and what we want to make sure we do, because we don't know if there's some type of catalyst unless you're paying attention, we don't know exactly what's happening with the stock, we would like to see confirmation of some sort. There are several ways to see confirmation. I get into EMAs. I have an EMA video in the description box below. I'll leave the link, so if you'd like to see the way I use the EMA and getting confirmation on an uptrend, you can do so. Now, the concept behind this is waiting for possibly a higher low setup. So the stock price, again, it sells off. We run into a clear support for the stock. It makes a higher high. At that point, maybe now we are in the trade as it's breaking the highs as a breakout, right? Now we get a strong move up. We get this flag pattern over. It's a pattern we recognize, and then we get a push higher. Correct? So let's go ahead and erase a few of the lines so we can make it a little bit more clear to read. And we get ourselves the bottom. Now, as we, again, put in a higher low, and this is what we'll be looking at in every trade. Now, the quicker you can scale your position and the more money you can make, is the way you're going to do that is by doing the same thing over and over. So by letting the stock price come down, using the concept buy low, sell high, but waiting for a higher low setup. Always wait for a higher low setup, and you will be right more than you are wrong if the stock price is quite low. Also, selling into resistance, which gets into another thing, but always selling into resistance. If you don't know where resistance is at, you need to practice your technicals a little bit more and then move forward. If we can get into when to get into our position. if we go ahead and we take the breakout, we will be risking, okay, if we grab our measuring tool, we would be measuring from where our entry price is down to the lowest low point, so where the wick was. Okay, so maybe not exactly where the stock price bounced at. You want to give yourself plenty of room. You want to see the stock, you want to give it breathing room to move around. And we don't want to be whipped out of our trade. So if we get into the stock at the breakout point, we would be risking 1.6%. That falls within our rules of saying 1 to 2% in our trade, taking a small enough position where, for example, at 1.6% would be $2.60 loss. And if we bought one share, we would only be losing $2.60 in this trade. Okay? Now, you can do the math. If you would like to lose $5 or $5.20, you could buy 2 shares of the stock, and you're only risking 1.6% of the money invested in this particular trade. And what we want to see is the upside potential to be much greater, right? So we're risking $2.60 to make almost $10, $9.97, or 6%. So the strategy should be fairly simple. We're waiting for a horizontal pattern to form in the chart so we know where, and we can define where clear lows are and clear highs are at in the stock. We also are waiting for a lower high setup to be put in at the low support. Once we get the lower high, we can start to measure our stop loss, okay, on where we believe the stock is going to be if it turns around, on where we will be protected, because we want to put our stops in where we know other buyers are in the market, because we want to use them as protection. We want to use other forms of buying pressure, right? So we are going to see, since buyers are coming in here and keeping the stock price up, doesn't it make sense to put our stop losses under these lows where other buyers came in? So the dollar value we are invested is how we stay calm in the trade. Now imagine that this trade started going against us. Imagine the trade started going sideways and moving something like this. Instead of getting stopped out here, we could wait for a higher low and then go ahead and get stopped out once it breaks the low of the wicks, right? Now here's the other concept. You're fully invested into the stock. You bought multiple shares of the stock, and they say that once it's a break of pattern, okay, once it breaks pattern, then you stop out. What happens if the stock price comes back down here, finds a double bottom close to where the wick is at, and then goes and makes its move higher that was expected to make? Doesn't it make sense? You would be biting your fingernails the whole time as it's coming against you, because the dollar value is too much. You weren't willing to risk, or it's uncomfortable to be a few $100s down in your account. When we're first starting out, you will become a more successful trader faster if you start out with a smaller dollar value, less risk involved, and you're comfortable with hanging in the trades, even for maybe a day or two. Using the bigger time frames when we're first starting out, again, as I've mentioned several times in other videos, we're under the PDT rule, so you can only make 3-day trades a week. It makes sense to use bigger time frames. We call this the top-down approach. If you're unfamiliar with the top-down approach, or you're using smaller time frames, you should check out the first link in the description box below. That will take you to our Discord group, where we upload videos going more in depth in these certain strategies and how to play the technical patterns. And you can also follow us on Facebook, which is the second link in the description below. Now, if you know anyone that could use the 1 to 2% stop loss information so they could feel more comfortable in their trades, please share the content with them. I'll see you in the next video.